and institutionalized discrimination that's hidden behind a smiling face. Housing agents who say, well, there are no vacancies right now. That you just didn't qualify for the mortgage because your financial credit history wasn't good enough. Last year, the Federal Reserve Board found African Americans are denied credit for homes at twice the rate white Americans are. And it is pervasive. It's what we found in the banking case in Texas, SacuBank in Texas. Discrimination in lending, discrimination in rendering mortgages. The bank has agreed to change its practices, as you heard from the Assistant Secretary. The bank has also agreed to a $2.1 billion agreement where they'll make $2.1 billion available to families who are low and moderate income across the country for mortgages. About 15,000 low and moderate income people will now be able to buy their own home because of the settlement we announced today. $2.1 billion is by far the largest settlement ever rendered to the federal government to settle a fair housing case. And in closing, the message of today is clear. You've heard it from a number of us now. This is a nation of laws, and this administration will enforce the laws. We'll take questions at this time. For $2.1 billion that would not have been available to families of low and moderate income, low and moderate income families across the country. About 15,000 families we estimate will get mortgages who would not have gotten mortgages otherwise. But aggressively to take a greater risk on these mortgages, yes. To give families mortgages who they would not have given otherwise, yes. They would not have qualified but for this affirmative action on the part of the bank, yes. With the $2.1 billion, lending that amount in mortgages, which will be a higher risk, and I'm sure there'll be a higher default rate on those mortgages than on the rest of the portfolio. That is the remedy that we sought, and the remedy that I would prefer, 15,000 families. This is of a scope so beyond anything that we've really done in the past.
There was the Community Reinvestment Act, or CRA, passed in 1977 during Jimmy Carter's first year in office. The law increased oversight of financial institutions to ensure that they were giving credit to low-income families.
We're going to make sure those banks do it and they don't discriminate. But the law went overboard. Institutions made loans they probably didn't want to make because they couldn't seem racist. It empowered these community groups who would then bully the banks. Acorn bullied the banks.
Indeed, ACORN, the Associations of Community Organizers for Reform Now, would before long come up with a new tactic, challenging a thrift merger in Illinois, claiming they didn't make the kind of loans that ACORN felt were required under the CRA. A young community organizer named Barack Obama worked closely with the ACORN activists behind the new strategy. And that strategy worked. ACORN prevailed in court, and soon credit standards were being lowered across the country. While at first Fannie actually resisted buying up some of those shaky mortgages, at the tail end of the Clinton administration, Fannie Mae was told to substantially increase the percentage of those mortgages in its portfolio.
ACORN's attorney was, well, you guessed it, Barack Obama. Back in the 1990s, they used strong-arm tactics to force banks to give high-risk loans to low-income borrowers with bad credit.
ACORN uses a militant tactic. They call it direct action. Sometimes ACORN will actually send people to a bank official's home. They'll scare him, they'll scare his kids. Again, all in an effort to get the banks to make these bad loans.
It is indeed a very troubling report, but it is a report of extraordinary importance, not only to those who wish to own a home, but as to the taxpayers of this country who would pay the cost of the cleanup of an enterprise failure. The analysis makes clear that more resources must be brought to bear to ensure the highest standards of conduct are not only required, but more importantly, they are actually met.
Through nearly a dozen hearings where, frankly, we were trying to fix something that wasn't broke. Mr. Chairman, we do not have a crisis at Freddie Mac, and in particular at Fannie Mae, under the outstanding leadership of Mr. Frank Raines. Everything in the 1992 Act has worked just fine. In fact, the GSEs have exceeded their housing goals. What we need to do today is to focus on the regulator, and this must be done in a manner so as not to impede their affordable housing mission. A mission that has seen innovation flourish from desktop underwriting to 100% loans.
And as well as the fact that I'm just pissed off at Ophelia, because if it wasn't for you, I don't think that we'd be here in the first place. And now the problem that we have and that we're faced with is maybe some individuals who wanted to do away with GSEs in the first place, you've given them an excuse to try to have this forum so that we can talk about it and maybe change the direction and the mission of what the GSEs had, which they've done a tremendous job. There's been nothing that was indicated that's wrong, with Fannie Mae. Freddie Mac has come up on its own, and the question that then presents is the competence that your agency has with reference to deciding and regulating these GSEs. And so I wish I could sit here and say that I'm not upset with you, but I am very upset because, what you do is you give, maybe giving a reason to, as Mr. Gonzalez said, to give someone a heart surgery when they really don't need it.
In addition to our important oversight role in this committee, I hope that we will move swiftly to create a new regulatory structure for Fannie Mae, for Freddie Mac, and the Federal Home Loan Banks.
This hearing is about the political lynching of Franklin Raines.
There is a very simple solution. Congress must create a new regulator with powers at least equal to those of other financial regulators, such as the OCC or the Federal Reserve.
Why should I have confidence? Why should anyone have confidence in you as a regulator at this point?
Sorry, Congressman. OFAO did not improperly apply accounting rules. Freddie Mac did. OFAO did not try to manage earnings improperly. Freddie Mac did. So this isn't about the agency engaging in improper conduct. It's about Freddie Mac.
And we passed Sarbanes-Oxley, which was a very tough response to that. And then I realized that Fannie Mae and Freddie Mac wouldn't even come under it. They weren't under the 34 Act. They weren't under the 33 Act. They play by their own rules, and I'm tempted to ask how many people in this room are in the payroll of Fannie Mae, because what they do is they basically hire every lobbyist they can possibly hire. They hire some people to lobby, and they hire some people not to lobby so that the opposition can't hire them. Fannie Mae has manipulated, in my judgment, OFAO for years. And for OFAO to finally come out with a report, as strong as it is, tells me that's got to be the minimum, not the maximum.
I think the responsibility that the Democrats have may rest more in resisting any efforts by Republicans in the Congress or by me when I was president to put some standards and tighten up a little on Fannie Mae and Freddie.